In 2016, a single hedge fund made $2.04 billion in a single day. Not from building companies, not from innovation, not from creating jobs. They made it from a country that was starving. Argentina had just defaulted on its debt. Schools were closing. Hospitals ran out of medicine. The economy was in freefall, and while millions suffered, a handful of investors celebrated their biggest payday in history. Here's what makes this disturbing. They didn't get lucky. They engineered it. They bought Argentina's worthless debt for pennies, then sued the country for full price. When Argentina refused to pay, these investors didn't back down. They seized Argentina's naval ship in Ghana. They tried to confiscate the presidential plane. They fought for 15 years until Argentina had no choice but to surrender. This wasn't an anomaly. It's a business model. And it's happening right now in Puerto Rico, Zambia, Lebanon, and dozens of countries you've never heard of. Bankruptcy for most people means the end. For a small group of investors, it means opportunity. Welcome to The Financial Detective, where we investigate financial systems like crime scenes, using forgotten economists, hidden documents, and centuries of evidence. Because money, power, and history collide, and someone always profits. This is case file number 1, the bankruptcy vultures. And by the end of this investigation, you'll understand exactly how billions are extracted from collapse, who perfected this system, and why it keeps working. The crime scene. Let's start with what bankruptcy is supposed to mean. For individuals, it's a legal process. You can't pay your debts, so a court steps in. Your assets are divided among creditors. Some debts are forgiven. You get a second chance. The system recognizes that endless debt is worse than a fresh start. For corporations, it works similarly. Chapter 11, Bankruptcy in the United States, allows companies to restructure. Creditors negotiate. Some get paid less. Others wait longer. But the company survives, keeps employing people, and eventually recovers. It's messy, but it's built on a logic of compromise. But countries can't file for bankruptcy. There's no international bankruptcy court. No global judge to divide assets fairly. When a nation defaults when it simply cannot pay what it owes, there is no legal framework to force a resolution. Instead, there's negotiation. Creditors in the country sit down and work out a deal. Historically, this meant taking a loss. If you lent money to a bankrupt country, you accepted you weren't getting everything back. Maybe 50 cents on the dollar, maybe 30. You moved on. That was the unwritten rule. Until someone realized the rule could be broken. In the 1980s, a new kind of investor appeared. They didn't lend money to stable governments. They bought old debt that had already gone bad. Bonds from countries that had defaulted years earlier. Debt trading for 5 cents, 10 cents on the dollar. Debt everyone else had written off. Why would anyone buy worthless paper? Because it wasn't worthless. Not if you knew what to do with it. These investors weren't planning to negotiate. They were planning to sue, and not in the debtor country's courts. In New York, in London, in jurisdictions where contracts are sacred and sovereign immunity has limits. This is where financial engineering begins. The moment someone realized that bankrupt debt isn't a loss, it's a legal weapon. Vulture funds, the term isn't an insult. It's descriptive. Vultures feed on the dead. These funds feed on financial corpses. But to understand how this works, we need to go back further. Because debt, sovereignty, and enforcement have always collided, and every time someone found a way to profit. In 1881, Egypt defaulted on its debts to European creditors. The country had borrowed heavily to modernize, to build infrastructure, to fund the Suez Canal, but revenues collapsed. Repayment became impossible. Egypt tried to negotiate. Creditors refused. Instead, Britain and France didn't just demand payment. They took control of Egypt's finances directly. European officials were installed in the Egyptian treasury. Tax revenues were redirected to bondholders before anything else. Schools, police, the military all came second. Debt came first. This wasn't negotiation. It was occupation. Financial, then military. Within a few years, Britain controlled Egypt outright. The debt was the excuse. Control was the goal. A similar pattern played out across Latin America in the early 20th century. When countries defaulted, gunboats appeared. The United States sent Marines to collect debts in Nicaragua, Haiti, and the Dominican Republic. Ports were seized. Customs houses were occupied. Revenue was extracted at gunpoint. This is what economists used to call gunboat diplomacy. Force was the collection method. Debt was the justification. It worked because power was concentrated. Empires could compel payment. Weaker nations had no recourse. Then the world changed. Decolonization happened. International law evolved. Sending warships to collect debts became politically unacceptable. The rules shifted. Military force was replaced with legal force. Gunboats were replaced with lawsuits. And a new kind of predator emerged. The first modern Vulture case that set the precedent happened in 1996. A small firm called Elliott Management, run by billionaire Paul Singer, bought $20 million of defaulted Peruvian debt for $11 million. Peru was negotiating with creditors to settle for less. Most creditors agreed. Elliott refused. They sued, not for $11 million, not even for $20 million. They sued for the full face value plus decades of unpaid interest. Over $50 million, Peru fought, but Elliott won. Courts in New York ruled that Peru had to pay. Elliott made a 400% return, and every Vulture fund on earth took notice. Argentina collapsed. The economy imploded. Unemployment hit 25%. Riots broke out. The government defaulted on $100 billion in debt, the largest sovereign default in history at the time. Most creditors eventually accepted a deal. Argentina offered them new bonds worth about 30 cents on the dollar. Painful, but realistic. Over 92% of creditors agreed. They took the loss and moved on. But a small group refused. Led by Elliott Management and a handful of other hedge funds, they rejected every settlement. They held out for full payment. Here's where it gets surgical. These funds had bought Argentina's debt after the default for as little as 20 cents on the dollar. They weren't original lenders. They were scavengers. But legally, they owned the bonds. And bonds are contracts. Contracts enforced in New York courts where Argentina had issued the debt. Elliott sued. Argentina ignored them, so Elliott got creative. In 2012, they convinced a judge in Ghana to seize an Argentine naval ship docked in port. The ship was detained. Argentina had to pay to get it back. It was humiliating, but it was also a message. Your assets are not safe. Then Elliott went further. They tried to seize the presidential plane. They tracked Argentine assets worldwide, bank accounts, real estate, anything they could attach. And most devastatingly, they convinced a U.S. judge, Thomas Griesa, to freeze Argentina's ability to pay the 92% of creditors who had accepted the settlement. The ruling was simple and brutal. If Argentina paid the majority creditors without paying Elliott in full, they would be in contempt of court. Argentina was trapped. Pay everyone or pay no one. For over a decade, Argentina fought. They called Elliott vultures, extortionists, predators. They were right, but it didn't matter. Elliott had the law on their side. In 2016, a new Argentine president gave up. The country settled, gave up. Elliott and the other holdouts received $2.04 billion on bonds they'd bought for a fraction of that. Paul Singer personally made over $1 billion. This wasn't theft in the traditional sense. It was perfectly legal. That's what makes it so disturbing. The system allows this. Courts enforce it. And once the precedent was set, the model spread. Puerto Rico came next. After the island's debt crisis in 2015, Vulture funds swarmed. They bought distressed Puerto Rican bonds and fought every restructuring attempt. While hospitals closed and the power grid failed, these funds demanded full repayment. They hired lobbyists. They influenced politicians. They weaponized the legal system. Zambia, 2007. A Vulture fund called Donegal International bought $3 million of Zambian debt, then sued for $55 million. Zambia was one of the poorest countries on earth. Donegal won $15 million. The Zambian government had been spending $17 million annually on healthcare. One Vulture fund extracted nearly a year's worth of healthcare funding. The pattern is always the same. Wait for crisis. Buy debt cheap. Sue for full value. Outlast. Extract. This is an investment. It's a form of legal predation. And it works because the global financial system has no mechanism to stop it. The evidence so who are these Vulture funds? They're not shadowy cartels. They're hedge funds. Registered, regulated, respectable. Elliott Management is one of the largest. Founded by Paul Singer in 1977, it manages over $50 billion. Singer is a major political donor. He funds think tanks. He's praised in financial media as a genius. His strategy is described as distressed debt investing. Not predatory, not exploitative, just smart. Other major players include Aurelius Capital, run by Mark Brodsky, Monarch Alternative Capital, M Limited. These are sophisticated operations. They employ lawyers, economists, and former government officials. They study bankruptcy law in every jurisdiction. They know exactly which courts will enforce their claims, and they're not breaking laws. That's the critical point. This is legal. Courts have repeatedly ruled in their favor. When Argentina argued that forcing full repayment would harm millions of people, Judge Griesa replied that contracts must be honored. Suffering is irrelevant. Law is law. But here's what the law doesn't see, the asymmetry. A hedge fund can wait 15 years for a payout. They have capital. They have patience. A bankrupt country doesn't have time. People are starving now. Hospitals need funding now. Every year of legal battle is a year without investment, without recovery, without growth. The economic term for this is holdout problem. In any negotiation where you need consensus, a single holdout can block the entire deal. Vulture funds weaponize this. They know that even a small minority can paralyze a country's recovery, so they hold out. They wait. They extract maximum value from maximum desperation, and the profits are staggering. Vulture funds routinely achieve returns of 300%, 500%, even 1,000%. These aren't market returns. These are legal extortion returns. Who pays? Not the hedge funds, not the lawyers. The people in the bankrupt country pay through higher taxes, through cuts to healthcare, education, and infrastructure, through lost decades of growth. This is wealth extraction at a sovereign scale. It's colonialism with lawyers instead of soldiers. But vulture funds couldn't exist without a deeper structure. They need courts that enforce contracts above all else. They need laws that treat sovereign bonds like any other debt. They need jurisdictions that don't care about human consequences, only legal ones. And they have it. New York and London are the two major centers for sovereign debt issuance. When countries borrow, they agree to be sued in these jurisdictions. It seems reasonable at the time. It gives creditors confidence. But it also gives vulture funds a weapon. Because unlike domestic courts, foreign courts have no accountability to the people who suffer. A judge in New York doesn't face Argentine voters. A judge in London doesn't care about Zambian hospitals. They enforce contracts. That's their job. And contracts, in their view, are sacred. This legal architecture was built for a different era. It was designed when creditors were banks and governments, not hedge funds. It assumed good faith negotiation. It assumed creditors wanted the country to recover so it could pay over time. Vulture funds operate under no such assumption. They don't want recovery. They want extraction, and the system lets them do it. There have been attempts at reform. The United Nations proposed a sovereign debt restructuring mechanism in 2015. It would create a legal process for countries to declare bankruptcy, similar to Corporate Chapter 11. Creditors would have to negotiate. Holdouts couldn't block deals. It failed. The United States voted against it. The UK voted against it. Why? Because their courts, their banks, their financial industries profit from the current system. Reform would shift power away from creditors, away from New York and London, away from the very systems that benefit from chaos. And right now, this is happening in real time. Lebanon defaulted in 2020. Vulture funds have already started buying its debt. They're preparing lawsuits. They're mapping assets. They're waiting. Sri Lanka defaulted in 2022. Ghana in 2023. Each default is a new opportunity. Each crisis is a new feeding ground. And it's not just countries. Puerto Rico, a U.S. territory, went through this exact process. Vulture funds bought its bonds. They blocked restructuring. They demanded full payment while the island couldn't even keep the lights on. Congress had to intervene with special legislation just to create a bankruptcy process that didn't exist. The pattern is accelerating. Climate change will create more defaults. Rising interest rates will push vulnerable countries over the edge. And every time a country collapses, vulture funds will be there, waiting, buying, suing, extracting. This isn't a bug in the system. It's a feature. The global financial architecture is designed to favor creditors over debtors. Contracts over people, legal claims over human need, and until that architecture changes, bankruptcy will remain profitable. The verdict, so what does this mean for you? First, understand that this isn't ancient history. This is happening now. When you hear about a country just as this, know that vulture funds are already moving. They're buying debt. They're hiring lawyers. They're preparing to extract billions. Second, recognize the pattern. Debt isn't just an economic tool. It's a control mechanism. And when countries can't pay, the chaos isn't random, it's engineered. Someone profits from every collapse. Third, this affects you even if you don't live in a bankrupt country. Because these same financial strategies, the same legal tactics, the same predatory logic, they exist at every level. Distressed debt investing happens to cities, to hospitals, to pension funds. The mechanism scales down. Understanding this doesn't give you a solution, but it does give you clarity. You stop seeing defaults as failures and start seeing them as opportunities, at least for those positioned to exploit them. This is the financial system's dirty secret. Bankruptcy isn't the end of the game. For some, it's the most profitable part. Now you have the evidence. Now you understand the mechanism. What you do with that knowledge is up to you. If this investigation changed how you see the financial world, subscribe. There are more cases to solve, more evidence to uncover, more systems to expose. This is the financial detective, and the investigation is just beginning.